What's going on, apes and apettes? Welcome back to the channel. I don't think a lot of people fully realize how much liquidity is drying up. Take for an example, Blackrock just lost 9% in one of their very large portfolios because of all of their concentrated investments in Russia. We have word today that Citigroup is looking to sell off their banking system in Russia after taking massive losses. A lot of people across the board are feeling the pain, not only from Russia, but some of these firms that were short on a lot of these commodities like nickel, like oil, like basically anything else. Even Cathie Wood had a $12 oil price target for 2022. Firms along that same mentality were shorting the hell out of all of these commodities, and they have blew up in everybody's faces. So there's a lot of hedge funds out there feeling a lot of pain, and we're going to go over that as well as everything else you guys need to know. So we have a jam-packed video. The only thing that I ask is that you hit that like button and subscribe to the channel if you guys have not already. Only about 50% of you guys are actually subscribed to the channel, so if you are not, you definitely want to stay up to date with this information and make you money. If you guys want to come trade with us, link down below in the pinned comment to do so for that, as well as get yourself some free stocks. Links down below in the description with Weeble, Mumu, and Public. AMC is doing great today, up about 3% for a majority of the day. Commodity prices are coming down. Oil is coming down as well, down about 6% today, but oil is still well above that recession threshold at $100 per barrel. Brent crude still at almost 120 a barrel, and just regular oil, American oil, is at about 116 a barrel. So we do have a big data point tomorrow that should see some of these commodity price inflation points in that report. And as you guys know, I've went over it many times. We have core CPI month over month, 8:30 in the morning. Core CPI year over year as well at 8:30, continuing jobless claims and initial jobless claims at 8:30 in the morning as well. So make sure you guys finalize whatever trades that you want to put on, obviously today. And, you know, I do think that we're going to see probably a substantial red day tomorrow because you are seeing this artificial move today. You're seeing the markets up. Let's take a look. Markets are up quite substantially, over 2% across the board. NASDAQ up 3%. Russell 2000 up 2.89%. You're not seeing that fear heading into the catalyst tomorrow, so I think it's very easy to upset and sell off this little rip. I really think it's a lot of shorts covering on the broad indexes here because commodities are coming down a little bit, and historically when commodities rally, especially oil, you always go into a recession. Why do people buy commodities? Well, it's a hedge against inflation, because when you buy a commodity, inflation affects that, right? So if you're buying wheat and wheat goes into cereal or other things, inflation comes, they raise the price on all of that. Well, it's because the price of wheat just went up. So it's a big hedge against inflation, and you are seeing, you know, a lot of fears coming down today because some commodities are going down, like oil 6%, but I don't think this is the end of it. Russia announced that they were going to be banning exports, but they didn't announce what they were going to be banning. If it was going to be oil, sunflower oil, if it was going to be natural gas or wheat or corn or what it is going to be, they didn't say that. So we really don't have clarity on that aspect. And once that comes out, I think that's going to be a big dagger in the coffin, as well as other countries that do ban Russian oil. And we are heading into the busy season for oil, right? You're heading into spring break, spring, summertime, coming out of winter. So winter's a big natural gas season because you're using that mostly to heat your house. Oil, mostly for cars and gas. That's what it's really associated with. Or even plastics, right? Plastic has oil in it. And, you know, the spring, summer, that's when you see a lot of demand for oil. And all of this is coming at precisely that time. So when you add all of this together, what does this report mean tomorrow when it comes out? Well, we're going to see high inflation, but the problem is, and I don't think investors have priced this in yet, is that the Fed cannot do anything for this inflation that we are seeing. This is not a demand side inflation. It's not inflation because there's so many people wanting to buy so many products. That's not what it is. It's inflation because war has broken out, oil went crazy, commodities went crazy, and the Fed can't stop that demand on a global scale, right? It's not even a supply issue. It's just a lot of demand around the world and a lot of future expectations for a lot more demand. So the Fed can't do anything about it. So really raising rates is not going to help anything. It's not going to help anything. It's not going to help you at the pump. It's not going to help you in the grocery store. It's not going to help you, period, when these geopolitical tensions are going on. So I think it puts the Fed in an even harder situation between letting market participants know that they are going to hawk down on inflation, get that under control, but at the same time, they won't be able to. So you might be stuck seeing these very high CPI reports, and what might ultimately happen is the markets start to realize, hey, the Fed can't do anything about this. This is geopolitical tensions that are causing this inflation. Eventually, it'll go down, and it's not necessarily the dollar just eroding value as much as people think it is. So I think you will see investors take a chill pill here in the next couple of months. Inflation will probably start to come down just a little bit, but we're in for some very nasty readings in the next couple of readings. Get prepared. They're going to be nasty, over 10%. Now, as far as this whole Blackrock situation, so check this out. Blackrock hedge fund raised its Russia bet, suffered record loss by Bloomberg. One hedge fund team at Blackrock Inc. saw Vladimir Putin's invasion of Ukraine as a chance to buy more of the country's stocks. That decision has backfired. BlackRock's Emerging Frontiers Fund plunged over 10% in February, suffering the worst trading loss since it started more than a decade ago, according to people with knowledge of the matter in an investor document seen by Bloomberg. The fund, which also managed $960 million at the end of January, is now down about 7% this year, said the people who asked not to be identified because the details are private. Russia was one of the biggest bets for the hedge fund at the start of February, with a 9% of its gross assets invested in the country's shares. After a research trip to the country in January, the document shows Sam Vecht, head of the team that manages the fund, told investors he raised the bet further when the invasion began. One of the people said, the fund currently has zero exposure to Russia after writing down all of its bets. Two people said a spokesman for the world's largest asset manager declined to comment. So they got burned very bad, lost hundreds of millions of dollars, and this is only one story out of many that are going to come out. With the commodity front, a lot of people that were shorting commodities that just got blew up and took massive losses, like that coal trade where somebody shorted coal a year ago and it's up dramatically. They actually shorted the futures of it, so they had to deliver over $500 million of coal for their margin call, and blew up their portfolio. But nevertheless, a lot of funds getting blown up in the commodity aspect, a lot of funds getting blown up in the stock, bonds, and treasuries front from Russia itself, and that is going to lead to a lot of margin calls. But like we have talked about many times, just because hedge funds get margin called does not mean they cover on their short positions. That does not mean AMC will go through the MOAS right away. What that means is that they are very prone to seeing their short position backfire on AMC, them having to cover on AMC if we get a catalyst for AMC during these times where liquidity is being restricted. So in simple words, you see margin calls for hedge funds. They are in a very bad position. They have short positions on AMC. Those short positions start to go against them, so the stock price starts to rally, and then they don't have as much money in their overall portfolio, so then they have to cover on their short position, and that starts the domino effect that we have talked about many times. So that is what you guys need to know. We'll come back to the technical analysis in just 1 second, but I do want to go over some of the more specific AMC data for the day. And we are looking at 21.09% short interest of free float, 108.58 million shares that are sold short, cost of our max of 2.32%, and the utilization is 100%. And this is just really surprising at this point. The cost of our max only at 2.32%, and the utilization is at 100%. Typically, in a normal stock, you would see the cost to borrow going up so that hedge funds would lend out their stock, but no hedge funds want to lend out any shares at 2.32%, and the proof is here, and that is very obvious. The days to cover is at 2.58 as well. So definitely looking good as far as the short squeeze is concerned. For the day, not that much actually happening as far as institutional option flows. 6 orders totaling $756.64 thousand. Positive order value of 52%. Over the past week, 48% positive order value, 111 orders totaling $36.28 million. So it's been a pretty docile last couple of days, last week for AMC institutional option flows, and that's what it looks like across the board. I think this is really a fake rally, and ultimately tomorrow will give us that bigger move to the upside, or will give us a big move to the downside. Partly why the markets are rallying right now is that Russia announces new ceasefire in Ukraine. It says Russia on Wednesday announced a new ceasefire in Ukraine, allowing citizens to flee the war-torn country. The ceasefire follows a similar announcement on Tuesday when Russia said it would allow Ukrainian civilians to pass safely through Chernihiv, Sumy, Mariupol, Kyiv, and Kharkiv. However, the only safe corridor allowing people to leave was open in Sumy on Tuesday, and this is from 9 a.m. till 9 p.m. to allow safe passage through 6 corridors. So I think if this is why the markets are rallying as well, it's not valid. It's not valid. I could see a material change when something like a ceasefire in general is announced. The war is over. Expect a big rally when that happens. But to see the markets up 3% on a 12-hour ceasefire is kind of crazy in my personal opinion. And just another little interesting fact, McDonald's says Russian shutdown will cost the fast food chain $50 million a month. That's wild. That's wild. Like, Russia only got McDonald's in, I believe, 1990 or the late 80s, right at the end of the Soviet Union, and now it's taken away from them. Come on. You take McDonald's away from Americans. You take McDonald's away from your kids. They're going to freak out on you. But nevertheless, not too many people are happy over in Russia right now. Everything got taken away from them. I think it's only a matter of time before, this all does come to an end. As far as the actual max pain, that is $17 by the end of this week. And for the Stocko Tracker data, I actually don't have it pulled up, which is surprising, honestly. I thought I had everything ready. For this week, nothing too crazy. 6,500 calls that are in the money, 123,000 that are out of the money. Not too much activity on the put side. For next week, that's going to be very interesting where it gets good. 7,000 calls that are in the money, 326,000 calls that are out of the money. As far as the put side, not too much activity as well over there. 83,000 puts that are in the money, 57,000 puts that are out of the money. But if we do see a big rally, check this out. This is what I've said many times. You have a very small amount of calls that are in the money relative to a large amount that are out of the money. And on the put side, you have a lot of puts that are in the money. Almost double the amount of puts that are in the money compared to out of the money. So once the price of the stock goes up, you're going to see a lot of these options go into the money very, very fast. Also, you're going to see a lot of puts go out of the money, and those two, the put and the call side do amount to the hedge funds having to buy stock to hedge or de-hedge their position. So I think the situation does look really good. Tomorrow is going to be the real key. What does happen there? AMC up about 4% at the time of recording this video. We're almost at $16 per share, so that is really good. And as you guys can see, the beautiful support level at $15 per share is remaining strong today. If we can get above this key level right here at about it's almost $17 per share, just call it $17 per share, I think that's really good heading into tomorrow, especially if we can do that in after hours and then get a green day somehow tomorrow. We could shoot up to the 1850s again. That would certainly not surprise me. As far as the major moving averages, you're looking at the 20-day simple moving average at $17.11 per share. So we're going to have to break out above that, and that's going to be a very bullish sign. Now, if we can get above 1850, that's the main level that I want to see, so we can get back to this plateau of support up here, and then finally make that move to about 21, if not the mid 20s, and that does certainly look possible at this current moment. MACD is pretty much neutral. The RSI is still on the oversold side, so we are definitely due for a bounce, and we do have low volume. So once that volume comes back into the stock, it is going to be a beautiful thing. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Get yourself free stocks, links down below in the description, as well as come join the trading community. Thank you guys for watching, and I will see you in the next one.